Good afternoon and welcome to the first annual Homestead Funds Electric Cooperative Informational Shareholder Meeting. I can't thank everyone enough for joining us today. And it's a very special day for the Homestead Funds. It's our 30-year anniversary. I hope at this time everyone is safe and well. I know there's a lot of issues within our communities. Our thoughts, prayers, and positive thoughts go out to everyone. So please know that we have you in our hearts. As I said, today we're celebrating our 30-year anniversary, and it's quite the milestone. We were started by co-ops, for co-ops and their employees, and we remain committed to our roots and strive to continue to deliver long-term value to our clients, our cooperatives, and their employees. It's very, very much a special day for us, and we thought it'd be a great time to celebrate by having our first annual shareholder meeting. I'd like to share a quick video of Jim Matheson, the CEO of NRECA, welcoming all attendees.
Welcome, and thank you for your support of the Homestead Funds. It's hard to believe it's been 30 years since the Homestead Funds were created, and of course they were created by electric cooperatives. What a rich history over those 30 years. A history of providing service and advice across the cooperative community. And what I find exciting is how much that advice and those services are being expanded in the current time frame. I give Homestead Funds credit for meeting the needs of our members across the board. And so whether it's advice about asset allocation, about special storm funds, they're thinking about what members need and asking what members need, and they're providing solutions to members' issues. I hope this conference gives everyone the opportunity to ask questions, learn information, and continue the rich tradition of Homestead Funds acting on behalf of its membership. Thanks again for supporting Homestead Funds. I hope you have a great conference.
Thank you. I can't say thank you, Jim. That was pre-recorded. What we'd like to discuss today and go over a few ground rules. After the opening remarks, we're going to spend the next 30 to 40 minutes discussing specific co-op challenges and needs. And you're going to hear from your colleagues, your peers, about how working together with the Homestead team, we've found solutions to those needs. This is a conference for our clients. It's not a big commercial. It's really how we've grown as an organization supporting cooperative needs. Just so you know, all attendees are on mute. We do have a question feature. So after each segment, that'll be moderated by Brian Allen, you'll have the ability to type in your questions. And Raymond Scott will read them, and either our subject matter expert or Brian will answer them. Just so you know, this meeting is being recorded. We'll send out the presentations via email sometime after Thanksgiving. And with that, let's get started. So, a little snapshot of our growth throughout the 30 years. We were started in 1990 on this actual date. It was really two funds, the Daily Income Fund and the Value Fund. In 91, the short-term bond fund came into existence. In 95, the short-term government fund. And again, these funds were started really at the request of co-ops. In 98, we started the small company stock fund. And in 01, the International Fund. A big milestone was in 2006 when we hit 1 billion in assets. And in 2013, 2 billion. Many of you know we reorganized in 14 and we launched our last fund, the Intermediate Bond Fund, last year, which is now approaching close to over 80 million in assets. We rolled out pre-built portfolios for a lot of your employees that were asking for models that could help meet their investment needs. And unfortunately, but to the credit of NRECA and the Homestead Funds, we successfully deployed our business continuity plan this year in March and went to a full remote capability. Next slide, please. It goes without saying, The success of the Homestead Funds for 30 years is based upon our performance track record, where 5 of our 7 actively managed funds have outperformed their benchmarks year to date, with the period ending September 30th, 2020. But that's year to date. Year to date, we had a conference call yesterday with our investment team, and the 3 previous quarters of 2020 have been like 3 different years in an economic cycle. The beginning of the year, the first quarter, we experienced growth, and then the roof caved in, the ground fell out, and by the end of March, we had reached minus 34% in the S&P 500. The second quarter, we saw a rebound in performance, and the third quarter, a continuation. Truly 3 different economic cycles in 1 year. And the track record kind of demonstrates how we've performed as an active manager, which we should perform positively in such volatile markets. And our track record over the 1, 5, and 10 years and since inception has proven that. Next slide, please. This goes to show how we have grown with the co-op community. We have 2.3 billion under management, 153 million in deferred compensation plans that many of you on the line are participants in. We have over 13,000 shareholder accounts. Retiree medical plans, which are very important to your cooperative health retiree benefit plans. We have over 272 million you have invested with us. And over 350 co-ops are represented as shareholders. And we have, as it looks today, we had 125 of you accept our invitation. I think throughout the last couple of years really demonstrates where we've worked with co-ops in helping fulfill needs. In 2018 and 2019, we created 2 programs, Storm Reserve Accounts and employee-sponsored savings programs in the workings with your co-op. And we'll touch upon those in a few minutes. Next slide, please. I work with some high-quality people. I've been on Wall Street firms for over 35 years. I would put our investment team up against any firm I've worked for or have competed against. Our equity and fixed income team is a series of individuals that have long tenured experience both within Homestead and also in other firms. They truly value the mission of the Homestead Funds and the cooperative mission for our members, and they're dedicated people that can compete with any of the top quality investment managers out there. Next slide. It goes without saying, quality performance also is backed by quality client-focused service. And this is a snapshot of our team. Many of you know Brian, many of you now getting to know Raymond as he travels, or was traveling, but the people on the phone and behind the scenes, Megan, Keith, Mark, Dave, and John, along with Kara and Makia, these are the people that really add quality to our overall servicing capabilities. And they're a very important part of our value proposition. Next slide, please. So now the main body of this informational meeting is the programs that were created by co-ops for co-ops. I'm going to have Brian Allen lead the next segment where you'll hear from your peers about some of the programs that you all created and now how we work together with you to fulfill those needs by providing solutions. Brian, take it away.
Thank you, Mark. My name is Brian Allen, and I serve as the Senior Institutional Sales Consultant for Homestead Funds. I've been employed by Homestead Funds for 18 years now. During this next segment of the meeting, we're going to hear from cooperative leadership from across the country and an NRCA subject matter expert to discuss specific investment needs that cooperatives have faced over the years, and then how Homestead Fund has provided a solution to these needs using our products and services. As Mark pointed out, feel free to submit questions during this segment, and my colleague Raymond Scott will present those questions to the panelists after their speaking parts. Our first topic that we're going to discuss today is deferred compensation accounts. Deferred compensation accounts are the most used cooperative-based accounts at Homestead Funds. These type of accounts come in different structures that fits co-op's unique needs. Currently, over 350 cooperatives use a deferred compensation account as an investment tool for their highly compensated employees or their board members. Here to provide an overview about deferred compensation accounts is Cindy Irvin, who serves as the Senior Advisor for Deferred Compensation at NRECA. Cindy?
Thanks, Brian. As Brian said, my name is Cindy Irving, and I'm one of the advisors on the NRECA Deferred Compensation team. My thanks go out to Mark and his team for including us in this event, especially since in looking at the list, I recognize a number of familiar names, and just wish we could all be together in a more traditional conference setting so I could see your face to match with your voice, but hopefully we'll be back into that in the near future. But yeah, in the meantime, as Mark said, I hope everyone is staying safe and healthy. Our team, the Deferred Compensation team and the Homestead team, have worked together serving our co-op partners since Homestead was launched back, as Mark said, in 1990. I don't know about you, 1990 doesn't seem that long ago to me, but it is 30 years. And about 30 years ago, we started out with, one precursor plan, and we now have basically 6 different plans that serve different needs and different types of co-ops, taxable co-ops, tax-exempt co-ops. We have some municipal entities that we work with as well. Over these 30 years, we're very proud of our successful partnership together, such that I think it was already mentioned by Brian that we work with more than 350 NRECA member co-ops, which is about, or a little more than actually, a third of our membership. But actually that also means that there's an opportunity there, because there's about 2/3 of you who may not be familiar with our deferred compensation programs or are familiar with deferred compensation at all, or the programs that we offer. So hopefully you might hear something today that is of interest to you, and I'm just happy to follow up with you if that's the case. So just generally, deferred compensation plans provide supplemental employee benefits that can help your co-op recruit, retain, and reward senior managers specifically, sometimes key employees, and also, I think as Brian mentioned, board members. These plans are available, and this is really important, only to a limited number of senior executives, what's known as a select group of management by the IRS. And they're offered in addition to the better known RISA, what are known as qualified plans, the 401k and the retirement security plan that most of you are familiar with. And these plans actually must be available to a broader employee group. But again, deferred compensation plans are only available to a limited or select group. So our team's role is to assist you and your co-op in choosing and implementing the deferred compensation plan or plans, multiple plans often, that best meet your specific needs. And Homestead's role, we work together hand in hand, is to serve as the investment provider for those plans. Actually, deferred compensation plans are not required to be funded, and some actually are not funded, but the most common plans typically are funded with co-op accounts that the co-op establishes for the benefit of the participants. One of these funded plans is by far our most popular or most common plan. It's the Executive Compensation 457B plan. It's a little bit of IRS speak, but suffice it to say that these plans offer executives at the co-ops, these folks that are in the select group, an additional option for sheltering current year taxable income on top of what they may be putting into their 401k plan. So both plans are accessible to them. And before I go into more details on the 457B plan, I just want to point out that the B plan, as we call it, is for tax exempt co-ops only, because the majority of our members are actually tax exempt. But we do have similar plans for taxable co-ops that I'm happy to discuss at a later time or offline if you give me a call. So I just thought I'd spend a few minutes reviewing, if your co-op does not have a 457B plan, some issues that you might be facing that might be a reason to sponsor a plan in the future. So many co-ops have executives that are at the peak of their career and that the point in their life where maybe their house is paid off, their children are out of college, maybe they've had a wedding or two, and they have additional cash flow to save, and they would rather save on a tax deferred basis over above what they're putting in the 401k. So a 457B plan essentially allows them to save, max out their 401k, and then save an additional, this year and next year, $19,500 on a tax deferred basis into a 457B plan. Another way 457B plans are used, because employers are allowed to make contributions to 457B plans. Often boards use 457B plans as a way to provide a tax deferred bonus type payment into the plan. And in many situations, executives are limited in their 401k match because they make over the IRS maximum. So for instance, this year, the IRS wage maximum is $285,000. Let's say somebody makes $385,000, just to make the math easy for me. So that's $100,000 over, and if your co-op has a 3% match, that person's losing out on a 3% match, and that match, I'm saying that in quotes, because it's not exactly the match, but it's the equivalent of it. It could be put into the 457B account to make that person whole. So that's another reason to think about it. Some co-ops, not a lot, but some co-ops have testing issues with their 401k. That basically means that highly compensated individuals, senior executives, can't max out their 401ks if perhaps they want to, because the non-highly compensated employees are not saving enough. So in a situation like that, say somebody would prefer to put in the $19,500 in the 401k, but because of how much the lesser compensated folks are putting in, they can only do $10,000. So that 457B account would be a place that they could achieve the same tax deferred status with the remaining $9,500. And I think Brian mentioned boards. 457B plans are also available to your board members. That it doesn't require setting up a separate plan, but that's very easy to do. We find that lots of co-ops have active professionals on their boards that their cash flow is sufficient from their day job, and they don't really need the per diems and the fees, and they'd prefer to set it aside for later and pay taxes on it later. So it's a benefit you can offer your boards, and most boards that have it presented to them are pretty interested in doing it. So these are just some of the reasons you might consider establishing a 457B plan if you don't already have one. They're very easy to set up. We've got all the draft documents, resolutions, pretty easy and inexpensive to administer. Our team, the NRECA Deferred Compensation team, and the Homestead staff, shout out to Kara and Makia, who are excellent, are always available to help you set up accounts and navigate the whole setup process. That was some thoughts on if you don't already have a 457B plan. But if you do, and I know a number of people in the audience do, there's a few things I just wanted to point out that you might want to think about. One of those is that Congress recently passed the Secure Act that changed the starting age for required minimum distributions for 457B, as well as other retirement plans, from 70.5 to 72. And that's great, but your participants cannot take advantage of that unless your plan document has been either readopted or amended, depending on the age of it. But it's quite easy to do. We have the draft documents. You just need to contact us and take it quickly to your board to get that done. Another thing that we often encounter is that 457B plans are often set up for CEOs, but there are others, folks, what's known as the C-suite, are also eligible to participate, but they either don't know about it, or they've forgotten about it, or they need to be reminded. So we always suggest that this time of year is actually a really good time of year because it's open enrollment time. So you might consider determining who else is eligible. And if you don't know, you could always contact me, and just making sure they know that that's an option for them. It's a nice employee benefit to offer someone at very little cost. And finally, something that we've seen a lot recently is there's a lot of, with the baby boomers leaving the workforce, we have a lot of new people coming in to HR and benefit administrator functions. And because deferred compensation isn't a huge part of that job, sometimes all the institutional memory walks out the door with the retiree. So in these situations, we're happy, myself and my colleague, Tolson Waddle, the two of us share these responsibilities. We're happy to sit down virtually, spend an hour with your new person, walk them through your plans, the documents, the tasks, and the resources, excuse me, available through NRECA and through cooperative.com. So just in closing, I would be remiss if I didn't also say we have other deferred compensation plans to meet other needs. Specifically, many of you may be familiar with our restoration plans that will restore retirement security plan benefits that may have been limited by IRS guidelines. Excuse me. And also, we've worked with a number of co-ops recently that have broadband or other initiatives, and they've got key employees, the project managers they want to make sure stay around. So we have some performance incentive deferred compensation plans that may suit your needs. So with that, I'm going to turn it back over to Brian, and happy to answer any questions, and happy Thanksgiving to everyone.
Thank you so much, Cindy. Raymond, do we have any questions for Cindy?
We do. The first question actually might be more pointed towards you, Brian, but the question states, is there any online access to our deferred compensation accounts? This person currently is receiving quarterly statements, and they're wondering if they can have more frequent access to their accounts. They also say they appreciate all that we do, and thank you.
Well, the simple answer to that question is yes, you do have online access to view your deferred compensation accounts. I would suggest that you call into our 800 number, which is on our website, or it will be provided at the end of this meeting. But if you call in and talk to one of our client service representatives, they can give you instructions on how to access that information online.
Thank you. The following question for you, Cindy, is how long does it generally take to set up a 457B plan?
Okay, so that's one of those it depends questions. The actual setup is quite easy and it can be done in less than a week. It all depends on when your next board meeting is. The key is getting to the point where you know you want to set up a plan. So that tends to take longer, and it all depends on how motivated you are. But I can sit down with somebody, explain the plan with you, get you the documents. If you have a board meeting next week, it could be past then. And that happens. Sometimes I see things that sort of, you know, there's always other things going on in people's lives, and it may take 6 months, but it could be done very quickly if there's a motivation, put it that way.
Thank you for that. And then the final question, it's asking, will Homestead Funds be offering health savings accounts or HSAs as an option in the future?
I guess that's going to be a question for me. That's a question that I regularly get when I'm out, you know, traveling the country talking to executive leadership. That is something that we're exploring, and that's the only answer I can give right now. If anything should change in the near future, we'll be sure to notify our cooperative leadership across the country about that.
That is all the questions for now. Thank you both.
Thank you.
Well, great. Since there's no more questions for you, Cindy, thank you so much for talking about this topic, and yeah, hang around just in case any additional questions do come up.
Sure, glad to.
Okay, thank you, Cindy. Now we're going to move on to our next topic, which is retiree medical benefit plan accounts. Retiree medical benefit plan accounts have been around since the early days of Homestead Funds. Back in the 90s, cooperatives took advantage of tax law changes that allowed them to set up trust accounts to fund employee future medical benefit needs until when they reach retirement. Our next guest is Chris Reese, President and CEO of Sussex Rural Electric in New Jersey, and he's here to discuss retiree medical plan accounts and the impact of funding this type of plan for his cooperative employees. Also, Chris will share how working with Homestead has helped their plan investments allocations mix over the last 18 months really come about. So I'm going to turn it over to Chris Reese now.
Thanks, Brian. Good afternoon, everyone. I'm, as Brian said, CEO at Sussex REC in New Jersey. We're the only co-op in New Jersey, or as I like to say, the best co-op in New Jersey. Mark asked me to speak about our retiree medical benefits trust fund, so I'll give you all a couple minutes about that. Sussex Rural Electric Cooperative has been with Homestead Funds for almost 25 years now, dating back to 1996. So we almost go back to the beginning with them. And back then, as medical insurance costs began to significantly increase, our cooperative decided to invest in and create an account with Homestead Funds to help subsidize the costs of our retiree healthcare benefits. And now for these past 25 years, we've maintained our post-retirement trust fund that pays for the employer portion of our retirees' medical insurance. This past December, which now seems like a decade ago rather than almost just a year ago, we requested an asset allocation review from Homestead to help keep our post-retirement liability and funds in line with our objective, which is reviewed by our board of directors and some of which is set by policy as well. The comprehensive review led to our own internal discussion about what was recommended, and that led to a reallocation of our funds that we ended up implementing in February of this year. It spread our investment risk better and, of course, maintained our goal of keeping the benefit plan 100% fully funded. Homestead Funds understood these requirements of having a solid rate of return while not risking or jeopardizing our retirees' medical benefits. The last thing an employee needs is to feel their retirement is at risk or at least shaky and unstable. Really, we couldn't have been more pleased with the plan that they developed and recommended to us, spreading out that risk and balancing the plan against that risk while also moving us from passive to more active investing. To get a little into specifics, the new allocation did things like decrease our exposure in the stock index fund, and instead we focused more on the value and growth funds. A bigger change was incorporating Homestead's newer intermediate bond fund into our mix, which increased our yield due to a longer maturity. In fact, if we go to the beginning of this year and look at our funds before and after reallocating, we realized a better return than we would have had. And again, on top of that better return, we feel our investment is better protected against market instability and volatility. And instability and volatility, that hasn't been happening much lately, right? So all of this helps keeps the contributions that co-op makes to our post-retirement trust fund stable, and we're not as concerned about having to increase our funding amounts as the account does well on its own, nice and steady. There's no worry of timing the market or chasing its ups and downs. Our retirees enjoy their benefits and we don't have to sweat it. This way, we maintain our retirees' trust, which in turn adds to current employees' trusts. Everyone is happy, which means I am. I didn't have anything terribly further in depth on that, Brian. Appreciate you asking me to speak today. I offer my congratulations to you and to Homestead Funds as you celebrate your 30th anniversary.
Thank you so much, Chris. Raymond, do we have any questions for Chris?
We do. The first question is, Chris, what is the benefit of using the FAS account with Homestead Funds compared to paying your medical expenses out of your annual cash flows?
Well, certainly, like I mentioned earlier, we're able to keep more of a fixed contribution and can budget for that better. And then the investments kind of take care of the growth, and we're not ending up chasing increases over time. And that's benefited us since its inception.
Thank you.
Just to piggyback off what Chris said, when I talk to a lot of cooperatives that have these plans, it always seems like the cost of medical benefits keeps increasing every year and the goalposts keep moving. So a lot of cooperative leadership like the ability to invest some of those assets to help keep pace with that growth of the cost of medical plans over the years, and that's been a benefit to them for that.
That's right.
The next question that I have is, Chris, just in handling the account, have you made any distributions yet? And if you haven't, what does that process look like?
That's an active account that we use for funding with either, well, not to get too specific, but how payments go out. So there is a constant churn on that on an annual basis. I'm sorry, and then you said what was the other part of that?
How does that process look when you make distributions? Like, can you do it online? Do you have to submit a paper form?
Yeah,
That
go
would
ahead.
probably be more of a question for me, Chris, in that situation. Sure, that's one of the things I always tell my cooperative leadership to communicate with me when they're ready to make a distribution. And normally we'll work with the process with them, which makes it easier for them. But a lot of times it is a paper, a letter request from leadership to do that. But like I said, the easiest way is to communicate with myself or someone like you, Raymond, and we can walk them through the steps of those procedures when they're ready to do that.
Thank you, Brian and Chris. And there's one more question, but this is going back to Cindy with the deferred compensation. So thank you again, Chris, for your time.
Yeah, thank you so much, Chris.
Thanks, Brian.
So going back to deferred compensation, we have a question. If a co-op has had a 457B in the past, would it still be in place, or do they need to start the plan entirely over? This co-op, for example, their last CEO has been gone for over 7 years.
You probably do still have a plan in place that you could use, but we would suggest there's been some changes in regulations and minor tweaks. I mentioned the Secure Act and some other things that we would suggest that most likely, if you give me a call, I can tell you, because we should have your plan on file. But most likely we'd suggest that you readopt a plan. And again, we have the document, the resolutions and everything available to make it quite easy, but probably we would suggest readopting.
Okay.
That's it.
Thank you, Cindy.
Yep. Okay.
Okay, Raymond, if there's no further questions, we're going to move on to our third topic. Our third topic is going to explore community purpose accounts. This is an account structure that I've had the most discussions with cooperative leadership with recently. Cooperatives are always in search of ways to promote goodwill or provide a positive presence within the communities that they serve through the use of excess cash on the books or through the use of unclaimed capital credits. Cooperatives have opened up accounts at Homestead Funds that have given back to the community in forms of scholarships, economic development initiatives, or even a revolving loan program, to name a few. Our next guest is Joseph Herrera, General Manager of Socorro Electric in New Mexico, and he's here to discuss Socorro's decision to open a scholarship trust account a few years back, and then their decision to move those assets over to Homestead Funds to manage their investment needs with those assets. So I'm going to turn over the meeting over to Joseph now.
Thank you, Brian, and congratulations to Homestead Funds on 30 years of service. Round of applause for you guys. You guys have done a great job, and you probably started when you were right out of high school, huh? Because you barely look 30, Brian. Our needs for our unclaimed capital credits funds was growing. It was twofold, and that was to sustain it and to enrich it for our community. It was something that we've been looking at for the last couple of years with the board. Being part of the community, you want to work with your local community businesses. So we're leaving the money at the local bank that was home owned, and I always felt like we were putting it in the mattress and not getting anything back from that investment at the home bank. And so talking the board into moving into something that was not so high risk, but an instrument that they can get more out of and enrich our program for our local youth who were going on for higher education or onto a trade school. And so we have enriched our scholarships for our students. They're right now changed from a transition from a one-time scholarship grant to a 4-year scholarship grant totaling $8,000. And it's just become more member engaged as we've done that by enriching in that program. So we brought in different brokerage firms, and every time my board heard something was their commission. They always heard commissions. And so when I brought this to Brian's attention at one of the meetings we talked about this opportunity, and he opened my eyes to commissions and homestead, two things that don't go together. And so when we brought him in, Brian brought together a portfolio that showed the growth, the potential growth that you could have, limiting your risk and keeping the community involved by getting those scholarships and not putting that money at risk out there, because I do have a very conservative board and they didn't want to take that much of a risk. But after Brian's presentation, it was obvious to the board that they needed to move out and get away from just leaving it in a savings account at the local bank. So our solution was moving forward with Homestead Funds, because they had the different growth funds and they had the cash fund, and those funds were attractive to my board because they saw that they were not very high risk, and the plan that Brian put together and in association with our initial investment of $300,000 took a lot from my board to kind of release the purse strings, so to speak. So that was a very smooth transition for us. The solution, the impact is that when you're picking your partners, it's a long-term relationship that you're looking for. And that was what Homestead brought to the table, brought to Socorro Electric Cooperative and its foundation, so that we can enrich these scholarships for our community and for many years, because with those 4-year scholarships, those are relationships we're going to have with those students for 4 years and beyond, and it's paying off. And that's made possible with our relationship with Homestead Funds. And I'm just proud to be a part of Homestead Funds and proud that I was able to speak today, Brian, because 30 years, that's a great accomplishment. And you guys have, working with your staff, I worked with a lot of them. It's always been top-notch service and quality responses.
Thank you. Thank you for your kind words, Joseph. I do appreciate it. And just to let everybody know, my first presentation to Joseph and his board, I was crouched at an airport in the corner, hiding from loud intercoms at the airport, giving a presentation. So that just gives you an idea that we'll do what's needed to definitely present Homestead Funds capabilities to our clients and our potential clients out there. Raymond, do we have any questions for Joseph?
Yes, we have one question. Joseph, you mentioned that the co-op used unclaimed capital credits to fund these programs. Is that something that all co-ops can do? And this might be also more pointed towards Brian as well.
Well, for co-ops in New Mexico, when you have unclaimed capital credits, the statutes change that you don't have to issue them to the state. You're able to use them for educational purposes. So in 1967, the co-op developed a 501c3, and that's all for educational purposes. And you have to meet those IRS requirements, articles of incorporation, and that's been established long before I came along in 1967. So that tells you how long the co-op's been putting their funds in the local home-owned bank at a savings account, maybe a CD every so often. But yes, if your state statutes allow you to do that, then you can do that. And it's all about developing that 501c3.
And just to piggyback off Joseph, Raymond, my experience in working with cooperative leadership across the country is it's really a state-by-state thing. Some states say, yes, you can do it. Some states may say, no, you can't do it. And so some cooperatives that can't use unclaimed capital credits will use cash on their books to fund these type of accounts. So really it's a state-by-state basis. And like I said, I would suggest talking with your cooperative's legal advisor who can look into that information for you to see if you're eligible to do that.
Thank you both. There's no further questions at this time.
Well, thank you, Brian.
Well, thank you so much, Joseph. And I look forward to talking with you in the future. All right, now we're ready to move on to our fourth topic out of 5 topics. So we're getting closer to the end. The next topic is going to be storm reserve accounts. And with my experience, no matter where you are in the country, unpredictable natural disasters have a devastating impact on cooperatives and the communities that they serve. While some sources of financial aid like FEMA in the event of a disaster is determined at the federal level, they can only help combat the costs up to certain percentages related to those federally declared disasters. But not all storms, floods, fires, etc., can be deemed financial disasters. So how does a cooperative plan to pay for these events? A few cooperatives have chosen to fund investment savings accounts to set aside assets that may be used for future disaster-related expenses. So our next guest is Brad Hicks. He's the president and CEO of Northern Neck Electric in Virginia. He's here to discuss how really Northern Neck pioneered the decision to establish a storm reserve investment account and how to prepare for future disasters in their cooperative community. So I'm going to turn it over to Brad now.
Thank you, Brian. And again, as with the other guests, I would congratulate Homestead Funds on their 30-year anniversary, and we're thoroughly excited to be part of the program. So for the storm reserve, dating back to about 2018, Northern Neck was hit with a nor'easter, which caused significant damage. We had about 59% of our membership out. It was a challenging event, and we realized at that time that we needed to find really a proactive way to prepare for these events in the future in a strategic way. Many co-ops deal with this, but the damage that we saw from this, it did not receive state or federal funding. There was not a declaration saying it qualified. So we were kind of left, as we are many times, trying to figure out how we were going to pay for this. And that's when we put our heads together and began thinking about options, and the Homestead Fund was one that just kind of jumped out at us and another co-op. The real goal, though, was to strategically have money, a rainy day fund, if you would, set aside in the event that there are major storms during a year that do not qualify, that there's some mechanism that where we have access to funding that would not negatively affect our margins for that year. So that's what really started this. When we started working through how this was going to work and how we were going to calculate the contributions we were going to make on an annual basis, we actually went back to 2003, looked at the major events that we had from 2003 and at that time until 2018, and we calculated the average expenditures over those 15, 16 years at that time, and came up with a dollar amount. So what we do moving forward is each year, at the end of the year, we will calculate what the expenses have been for that year, and we will just average that over the numbers going back to 2003, and that's our contribution that we would make for the upcoming year. The other thing it did is it allowed us, from a budgeting standpoint, to really levelize and hopefully mitigate some of those unforeseen expenses associated with these events. We probably could have done it through a budget process. We felt like this was more of a strategic approach. There was a little bit of an insurance policy, if you would, and maybe I shouldn't say insurance policy. There was some insurance in the fact that we had funds available in the event a storm blew through. And for Northern Neck, we were already familiar with the Homestead Funds and their low fees, their ease of access, and their solid investment strategies. And their role as it was just, in our mind, was a great resource for us to make an investment into. And in our opinion, the best entity who we could have made an investment for that rainy day fund. It's worked out well for us. I just arrived in June of this year, and to this date, we have not had to tap into those funds. I will say that we did have a tropical storm that did come through. I believe it was Tropical Storm Isaias, and we made the decision that we probably will be tapping into those funds for the first time. So it's a good example of not having to impact our margins because we have this fund available. And we plan to continue to do this and work with our board to determine if the investments that we have now are where we want them to be. But it's been very, very valuable for Northern Neck and for our members. And ultimately, that is the number one thing I would want to highlight, is this minimizes the risk and impact that this has on our membership. So again, I'd just like to thank the Homestead Funds and Brian for inviting us to be part of this webinar. We thoroughly and greatly appreciate everything that the Homestead Fund does for Northern Neck Electric.
Thank you so much, Brad. You know what I like to say to a lot of cooperative leadership, that these type of accounts, we talk to individual shareholders about having a rainy day savings account for their individual needs. And I see this as a rainy day savings account really for our cooperative needs. That's the way I like to kind of equate, the two situations.
Absolutely. Couldn't agree more.
All right, Raymond, do we have any questions for Brad?
We do. Brad, the first question comes with, are you expensing the amounts going into the storm reserve account?
We are. Yes, we are.
Thank you. The second question is this the equivalent of a deferred revenue fund? It's kind of a multi-part question. So the first question is this the equivalent of a deferred revenue fund? Their follow-up question is, are you an RUS borrower? And last is, how does your auditor look at this?
I'll start in the middle. We are an RUS borrower. Since we're in Virginia, we are regulated by the State Corporation Commission. So we sent a letter to the commission and basically seeking permission to do what we were requesting from an investment standpoint. And we also issued a letter to RUS getting their approval and giving them an outline of what we were trying to accomplish. We made sure we had all of our if you would, our ducks in a row before we moved forward. The first question, I'm not quite sure. I'm not an accountant. I will say that. I'm an engineer, so I'm not quite sure how to answer that first question. So I would rather just not answer it as to just come up with something. And the third part of that question, if you could repeat that.
Yes, that's perfectly fine on the first question. If this participant further elaborates, I'll bring it up to you later. The last part of the question was, how does your auditor look at this?
I believe our staff reached out to our auditors as well before this began, so there's no issues with our auditing firm.
That sounds great. And again, if this participant gives any follow-up, I will just reach back out to you.
Okay,
Brad,
that'd be great.
Can I ask one question too? It seemed like when this account was set up a couple years ago, Northern Neck came up with some boxes that had to be checked to access these funds. Is that correct? And can you just go a little bit into that?
Yeah, thank you, Brian. That was something I meant to include, and I failed to, so thank you for reminding me. Yeah, this is not just, we just make a blank decision of when we want to tap into these funds. There is criteria that we took to our board and included in this, and it was also included in the letter that we sent to RUS and the State Corporation Commission. The parameters that we work off of is 10% of our membership has to be out for 24 hours or longer, or the event that occurs has to exceed $100,000. So it gives us some guidance, and it also sets some boundaries, if you would, of the use of these funds. For us, talking about the nor'easter that passed through in 2018, that event was a little over $300,000. So again, we're a small, medium-sized co-op. Larger co-ops, that's a small amount, but for us, it significantly impacts the bottom line. So again, very proactive way, and can't thank the Homestead Fund enough for working with us. And I would encourage other co-ops who are in a similar situation. I think this is a good option to mitigate some risk.
Sure. Okay. Thank you so much for speaking with us today, Brad. I do appreciate it.
Yes, sir. Thank you, too.
Okay. All right. Now we're going to move on to our last topic, which is corporate investment accounts. Whether it's to grow excess cash on hand that sits in low yielding bank or money market accounts, or diversifying strategic operating accounts to fund new plant, property, and equipment, or just establishing an organizational savings accounts. Cooperatives have funded corporate investment accounts over the last 30 years with Homestead Funds. It doesn't matter what asset level or duration for the invested assets, Homestead Funds has partnered with cooperatives to provide an investment option or multiple options through our asset allocation capabilities for those various needs. So Last but not least, I'm thrilled to introduce Kevin Wheeler, General Manager and CEO of Access to Energy Cooperative in Iowa. And Kevin's here to discuss the cooperative's decision to open a corporate account with Homestead Funds to invest their cooperative assets. So I'm going to turn it over to Kevin.
Good afternoon, Brian. Good afternoon, everybody. Congratulations to Homestead on the 30 years. And I'm kind of like Cindy, it seems like it was yesterday that the 30 years come about. We're in southeast Iowa, as Brian said. We're a mid-sized co-op for Iowa, small for most. We have about 10,000 meters. And in 2017, we had a large ag industrial load come on that was about 30% of our total load. And from our power supplier, we're on a delayed ratchet demand. So we collected the demand rate up front. And if they would ever close or go down, we're on the hook for that at that time for the next year. So we've actually taken this and kind of built what you want to call a contingency fund, and we've taken the money to put it in just a savings account, and we were drawing 0.25% on that. So the board had discussions strategically, and we listened to Homestead Funds talk at a regional meeting and tried to figure out, what we could do from a strategic standpoint to benefit versus just sitting there and having the money. We don't expect we need it tomorrow. And so with that, we worked with Homestead and Brian and his team to develop a very conservative portfolio to put this money out and let it sit there. And like I said, that's 30% of our total load. So if they would leave us, it puts us in pretty good mind. We're going to do something with it. We put it short-term government securities, intermediate bond term, short-term bond funds. And now we're looking at setting up a foundation. We've always done scholarships and done a lot through the community, but what our board is hoping with this is setting up a foundation and increase the scholarships or do other things within the community in time when we get to that point. We started the program, I think it was in September that Brian did the presentation to the board. So we're not seeing, a lot of big returns, which, like I said, we're in it for the long term. So we're not looking for the big returns you are in your 401k. And they've set a mark to where they want to be, and that's when they will start using some of the earnings off that to fund some of the other things that they want. Homestead has been super easy to work with. I know Raymond come out to talk to all of our employees in January. I don't know how Brian got that done. Raymond come out here and it was about 25 below zero and the snow was blowing, and just Brian gets to go to New Mexico, Florida, and Mark. So Raymond, we hope to get him back out here. But it's a great partnership for Access Energy, be with Homestead, to work with us, and our board has asked if they would come out once a year and do an update with them and kind of explain stuff to them, and they've been, like I said, very gracious to that, and it's been a win-win. So that's kind of the short version of that. I know somebody had asked about a contingency fund, if you want to call it that, or a delayed revenue. Yes, but like I said, we don't anticipate having to use it, but we want to make sure that the co-op is protected if for some unforeseen circumstance happens.
Sure. Thank you, Kevin. And the reason why I sent Raymond out is because I checked the weather forecast ahead of time. And if it's starting to get bad, then Raymond's going out there. I'm going to stay in the warm weather states.
Okay.
Raymond, do we have any questions for Kevin?
As of now, we have one question. Kevin, what was your cooperative's thought process on, I think you kind of covered this, but what was your cooperative's thought process on moving money from your current provider to Homestead Funds?
We were just in a daily fund, kind of like Joseph said, you go to the bank and you get 0.25% of a return on a daily fund. And I mean, it's a significant amount of money. I just hate to see it not do some work for our members. We want to make sure that fund's there, and we'll let it grow because, of course, we know power costs are going to increase evidently and over time, but we want to make sure that money is available. It could be 5 years, 10 years, 15 years down the road. And that's where the thought process was with the board. And I will tell you that it wasn't a conversation that happened in one board meeting. It was a conversation that happened over 3 or 4 board meetings. So they got comfortable understanding what the process was. I know, Brian, we talked about it early in the year and brought it to the board. They let it set, and then we brought it up again. So, I mean, we were probably in the process 7 or 8 months. I mean, you can do it quicker. You always want to make sure the board understands, is comfortable with what you're trying to do.
Sure. Definitely. Well, thank you so much, Kevin, for your comments. We do appreciate it. And I just want to thank all of our guest panelists today. Your information hopefully can reach some other cooperative leadership out there that's looking to do similar things. Mark, I've concluded my part of the session. I'm going to turn the meeting back over to you now.
Great. Thank you, Brian. Great job. And thank our participants for sharing some of their stories. The uniqueness of each story, some have been with us a long time, some have been just started. As we look ahead, every one of these programs, especially when it comes to storm reserve, especially another topic we didn't cover, which is employee-sponsored savings programs. We just didn't have time to cover that, but that's a new program that we started. But when I look ahead, just piggybacking off of what Kevin was talking about, helping co-ops build their investment capabilities. I like to put things in terms, when you think about 25 basis points in a money market or a savings account, it doesn't sound like a lot versus 1% in a short-term bond fund or 3% in a government fund, whatever. Those aren't necessarily the rates, but when you put that in actual terms on $100,000, $300,000, $1 million account, that's real money that you may be losing by leaving it in a non-performing interest-bearing account. And that's real money that could be a new truck, a new operating facility, some new technology systems, client servicing systems. I always try to, when I talk to CFOs, put things in actual dollar terms. When you equate the money you're leaving on the table versus what you could be earning in more, better performing portfolios. One thing when we look ahead that we just are launching is separately managed accounts. And these are customized portfolios. They're securities held in the cooperative name, opportunity for reduced fees. This is through RE Advisors, which is the advisor to the Homestead Funds. We have model portfolios, and we created this capability really for your corporate accounts, your capital expenditure accounts. It's typically three to 4 years and under. So something that we didn't have the infrastructure to do this, we do now. We've upgraded our internal technologies, and this is one thing that we're looking forward to sharing with you. Next slide, please. It goes without saying that a lot of the things we discussed today, we also do for individual investors. Some of you are our clients. A lot of your employees are. When it comes to asset allocation, when it comes to investment guidance, we have a personal connection. We have digital tools. We do offer virtual meetings. A lot of times we go to a co-op and do one-on-one meetings with employees. We can't right now, but it's important that what you've heard today, we do the same thing with individuals. So we'd love to talk with your benefits administrator, your BA at your co-op, and set up an opportunity to talk with your employees about the importance of savings. And our team of advisors that work with your employees to help them save for rainy days, save for college, save for their first home. In my case, save for 2 weddings with my 2 daughters. Everything that we can do to help your employees, like we help your co-op, it goes without saying we're here to help. I'd like to close right now by introducing Curtis Wynn, NRECA President and Roanoke Electric Cooperative Chief Executive Officer, to give some closing remarks on the Homestead Funds. Curtis, please take it away.
Thank you. Thank you, Mark. It's really, I'm just sitting here just kind of blown away with what I've heard today. I've learned quite a bit from my fellow cooperative leaders, from you, your staff. You've shared some very insightful experiences that's going on across the country with the Homestead Fund. So celebrating your 30th anniversary, what a way to do that, is to talk about the good things you're doing. I also took some very good notes that I plan to share with my team. We're taking away some ideas from what has just happened over the last few minutes. And it's obvious from what we've heard today that the Homestead Fund is truly a treasure at many levels. For our trade association, just being as the president for the last couple of years, one thing I've learned about trade associations is it's really about the value that you create and bring to your membership. And for NRECA to be so closely affiliated with an entity like Homestead Fund, that really brings a lot of value to our membership, and it creates a good situation for NRECA. And if you look at it at the local cooperative level, you've heard it already today at what's happening at so many cooperatives. And then, you know, as Mark just said, the employees have a tremendous benefit. So at the employee level, this Homestead Fund is a major treasure, and even at the family level. So I have a story of my own I'd love to share about Homestead Funds and my experience. First, at Roanoke, you know, we are heavily involved in strategy execution, measuring the effectiveness of our work by using the performance balance scorecard. We operate and set initiatives around four major perspectives. The first is the member owner perspective, which is simply a reflection of how well do we serve our member owners. The second perspective is the financial perspective, which is a reflection of the financial strength of our co-op. The third is the operational perspective, which is how well, how safely, and how efficiently do we run our co-op. What I believe is the most important perspective is the people perspective, which really measures how well, how trained, and how prepared are our employees to face the many challenges that we are confronted with as electric cooperatives. So one of our initiatives underneath that people perspective is called the Health and Wellness Initiative. And with that initiative, and I quote, it is to encourage and support our employees to be well-rounded individuals through activities focused on health, nutrition, financial, social, and emotional health. You know, that financial part of that initiative is where Homestead Fund has really been quite instrumental for Roanoke. For the past 2 years, we have done what we call financial wellness conversations with our employees. You know, with these, rather than reviewing our benefit packages with our employees, only our employees at an employee meeting, what we started doing a couple of years ago is we said, you know, the family needs to hear this, the spouses need to hear this. So we decided to treat our employees and their spouses or other family members to a very nice dinner at which we would provide them with updates on our employee benefits so that the spouse is there to hear maybe what the linemen or some of the employees are not taking home to share with the family about retirement and savings opportunities and all of the things that we offer as electric cooperatives. You know, in 2019, when I mentioned the idea to Mark, I expected him to send one of his very qualified staff members to join us. And to my surprise and to my delight, Mark told me that he was going to join us himself. Now, you can imagine how impressive our leadership team at Roanoke became when we informed our employees that not only were we going to treat them with and their significant other with a nice steak dinner, but we were also going to bring and be joined by a Wall Street veteran, the former CEO of Dreyfus Corporation, a subsidiary of BNY Mellon Investment Management. I use all of those big words, Mark, who has more than 35 years of experience in investment management. Now, you can imagine that after sharing that with our employees, our leadership team's stock, no pun intended, immediately went up. So thank you, Mark, for making that sacrifice. And it is a testament to the humble and committed leadership you're providing such a great team at Homestead Fund. Now, this year, with COVID-19, we did our second financial wellness conversation. So as all of us are doing, we're moving forward, even though COVID-19 is not allowing us to have the face-to-face experience, but we did have our second one, and the Homestead Fund joined us again. And this year, we were fortunate to have who I call the Scott brothers, Raymond and John. They joined us via Microsoft Teams. And I can tell you that our families were both enriched and inspired by the tools and the words of wisdom these gentlemen shared with us. And on a final personal note, I'll share a unique way that Homestead Fund has impacted my family. This summer, my youngest child, Ryan, worked at his first summer internship. He's a student at UNC Greensboro, and he had a chance to work this summer. And after it was over, he shocked me. When he told me, he said, "Dad, I want to invest some of my earnings." I would have never expected that from Ryan. But when sometimes, you know, when you give your kids advice, we never know when it's going to stick. But I guess our talks, his talks with me, my talks with him about the market, retirement, saving for the future, it must have stuck with him. So my next move was to connect Ryan with Raymond Scott, just to figure out how to start his own personal investment. So as a result of a good young man to young man conversation between these guys, Ryan continues to invest and to take advantage of dollar cost averaging, as I'm sure Raymond taught him. He understands the basic fundamentals and just speaks at a whole different level of what Homestead Fund means to me, and I'm sure some of the employees at Roanoke. So as I said in the beginning, we have a tremendous treasure in the Homestead Fund at all levels, with our businesses, with our employees, within our ECA, and with our families. So I want to join everyone else in congratulating you on this anniversary, and just thanking you for allowing me to be a part of this historic event today. I wish you very much success in the future.
Curtis, I can't thank you enough. And I'm glad I was off camera because you made me laugh, and I appreciate the kind words. You are a treasure to our organization. And honestly, I speak for not only myself, but everybody at the Homestead Funds when we welcome the opportunity to travel once again. I think the most fulfilling part of my job is visiting co-ops, leadership, and employees and talking about ways we can help. You know, we're part of NRECA. We're investors, but we're also participants in the plans and the funds. We eat what we cook, and we appreciate everything and your support. So thank you, Curtis.
My pleasure.
I do want to thank everyone for your time today. I know we went a little bit over. We have our phone number and our email there. If there are any questions for any of the participants that we didn't answer, anything you can think of, we welcome the opportunity to do a virtual meeting with your co-op leadership or your employees. We're here to help, and we thank you for your time, and we look forward to, you know, when we can do this in person. And you know, if you have a minute or two more, we'd like to have you take our quick survey if that fits in your schedule. So thank you all, and happy Thanksgiving. Please be safe, please be well, and thank you for the past 30 years, and let's make it another 30. Thank you very much.
Webinar is ending.